Dear students, welcome to the course session Standard Costing. Before learning standard costing, we should know what is historical cost. Historical cost is a post-mortem of the expenditure which has been already incurred. So, it is not an effective tool of cost control. Historical cost is valid only for one accounting period for which it has been prepared. An accounting period which starts from April 1st to 31st March of every year. The limitations of historical costing system have led to the development of standard costing system. Then, now what is standard cost? Standard cost is a predetermined cost. It is the determination of what should be the cost of production. Standard cost is a future cost which is determined in advance. According to CIMA England, CIMA means Chartered Institute of Management Accountants England. Standard cost is the predetermined cost based on technical estimates for materials, labor and overheads for a selected period of time for a prescribed set of working conditions. Now, what is standard costing? Standard costing is a technique of cost accounting under which standard costs are computed for each product or service and compared with the actual cost to determine the efficiency of operations. According to CIMA England, standard costing is the preparation of standard cost and applying them to measure the variations from actual cost and analyzing the causes of variations with a view to maintain maximum efficiency in production. There are certain preliminaries to the establishment of standard costing. 1. Establishment of a cost center. A business firm should be divided into sections based on functions such as manufacturing, administration, selling and distribution, HR, etc. Each section should be divided into cost centers to locate and fix responsibility for variances. So what is a variance? Variance is the difference between actual cost and the standard cost. Then second, types of standards. There are three types of standards. A basic standard which is established for use unaltered or unchanged over a long period of time is called a basic standard. B. Current standard. A standard related to current working conditions and established for use over a short period of time is known as current standard. It can be an ideal standard or an expected standard. Ideal standard is a standard which can attained under most favorable conditions. It is a theoretical standard and not practicable to attain. Expected standard is a standard which is anticipated to be attained during a future period. And C. Normal standard. It is a standard based on the average performance anticipated over a future period of time long enough to cover one trade cycle. Third step preliminary is setting of standard cost. Standards should be set for each element of cost. Then the element of cost are direct material, direct labor and overheads. The direct materials. The following two standards are developed for direct material: standard price of material and standard quantity or usage of material. Regarding direct labor, the following two standards are established for direct labor: standard time and a standard rate. With regard to the overheads, overheads are indirect expenditure, which are divided into fixed and variable, and the standard overhead rates are set for fixed overhead and variable overheads. Then estimated cost. Cost computed in advance of production based on past cost and factors affecting such cost is called estimated cost. Distinctions between standard cost and the estimated cost. Standard cost, it aims at what the cost should be, whereas estimated cost is an assessment of what the cost will be. In standard costing, it is determined on a scientific basis after taking into account certain level of efficiency. Estimated costs are based on average of past figures taking into consideration anticipated changes in future. Standard costs are used by a concern operating under standard costing system. Estimated costs may be used in any concern operating under historical costing system. Standard costs serve the purpose of cost control. whereas estimated costs are used for quoting selling price of new products and decision to buy or make. Then now, what is the difference between standard costing and budgetary control? Standard costs are set for production and production expenses. Budgets are compiled for all items of income and expenditure. In standard costing, standards are based on technical assessments. Budgets are based on past actuals adjusted to future trends. Standard costs are compiled for various elements of cost, whereas budgets are prepared for different functions of business. Standard costing is applied to the manufacture of a product providing a service. Budgetary control deals with the operations of the business as a whole. And the last, standard cost is a projection of cost accounts, whereas budget is a projection of financial accounts.